Hey guys, Bill Soriano here from Pittsburgh. It's Sunday, June 22nd, about right around here, 10 a.m. Eastern Standard Time. I think you guys are really going to like this video. The video is going to focus on the trade management rules for our Sniper Pro strategy. Okay, so first of all, again, I'm not a investment advisor. What I share with you today is for educational purposes only. Okay. Forex is a risky business. You can lose all or part of your capital, which is why we always stress that if you're a beginning trader, a beginner, or even intermediate and advanced, but trying a new strategy like the one I teach here, that you should do that on demo for at least 20 to 50 trades. This way you'll get an idea of how it works for you. Even though I'm showing you how some of these situations would play out, how some of these trade ideas will play out, you still need to do it for yourself because there's an element of mindset involved that gets in your way. Okay. And again, I try to make the strategy as damn near 100% objective, right? But there's always going to be a little bit of subjectivity here and there. Okay. But this is our Sniper Pro scanner overview PDF file, and it has just the basic overview of the scanner itself, the live educator, John Oliver, right, who goes live, the overview PDFs that he created. And then we have what I call our top trading plan strategy. This is our community's top trading plan strategy. Okay, it's using our community's proprietary indicator, which is called ATH-RSI crossover arrow indicator. It was created by the leader of our community, Michael Angel Martin. He's a great guy and he created this for us, and it just works perfectly with Sniper Pro and these six conditions that have to exist for you to take a trade. Now, this video is going to focus on the trade management section here of this trading plan because I did update this today and I have quite a few examples to show you from a video. You may have seen this in the video I did on Friday, but I wanted to show this because it's very, very important to show you how this trade management works here. One thing I do want to mention though is that when you look at these conditions, again, all six of these conditions need to exist on that indicator arrow where we get our ATH RSI crossover arrow indicator on TradingView, right? All six of these need to exist on that candle, okay? Now, of course, you're free to play around with this however you want. These are my conditions, right? And these are the conditions that I use to show you which trade ideas we get and how they play out. Okay. But you could decide, hey, if I get these first three conditions here, I just need one of these last three to take the trade, right? Or you could decide, hey, maybe you can make it stricter, right? You can say, hey, I need all six of these, plus I need at least one of these, or maybe I need one or two of these as well. Or you could say, hey, if I'm missing one of these six, but I have two or more of these down here, right? It's safe to take the trade for me. So you can play with this how you want. And again, you test it out on demo for 25, 50 trades, see how it goes. What I show you is I show you the trade ideas with all six of these required conditions met on that indicator arrow. Okay. The extra conditions are just icing on the cake. Don't need them. They're optional, right? And then, of course, the trade management is what we're going to go through today here. And I'm going to show you examples from the charts this week that are marked up from trade ideas that we had this week. Okay. So the first thing is, as always, we place the stop loss behind the recent high or low, right? So we can enter once all six of our conditions are met up here. Then if you get all six required conditions, you can enter the trade at the candle close, right? So the candle closes, we place our stop loss below the recent high or the low, and we risk 1% on all trades, guys. Okay, that's what I'm doing in this trade plan. Your plan can be to risk 0.5%, right? Or if you're more advanced, right? You may be risking 2 or even 3%, right? But the important thing is that you risk that same amount on all trades, guys. Otherwise, everything goes out the window. All the math goes out the window, right? So initially, when you mark up the trade, when you're in your demo account or your live account with your broker, you set your stop loss. You're going to set your take profit at 1 to 4. So if you're risking 1%, you're going to set your take profit, which takes you out of the trade at plus 4%. So it's a 1 to 4 risk to reward. Now, you're not going to get that on every trade, obviously, on every winning trade. You're going to have some trades where you have small losses, right? You're going to have some trades where you break even. You're going to have some small gains, and then you're going to have the bigger gains, which to me are like +2 or above, right? In this case, it would be +2, +3, or +4. Okay, now here's the important thing. At +1, okay, so you're risking 1%. When you're up by 1%, right? Or let's say that 1% is $50. When you're up by $50, you're going to move your stop loss now from -1 to minus 0.5. So initially, you're just going to reduce your risk in half. Okay. You're not going to move it to break even because what I've found in my testing over the years is that too many times price will come back down to that break even level and stop you out there before it takes off in your direction. Okay. So once you're up 1%, you move it to 0.5 minus 0.5. So you're reducing your risk in half. And I'll show you this on the charts here. Now, once you are up by 1.5%, okay, we don't wait till 2. We do it at 1.5 because this is what my back testing tells me. Okay. When you do your trades on demo, you may find something different and then you have to incorporate that into your trade plan. But for me, I find that once I get to plus 1.5, it's now safe to move that stop loss to break even. Okay. I don't wait for +2. Okay. And the reason why is because once we're up +2, we're going to move that stop loss to break to +1. Okay. Once we're up +3, we're going to move that stop loss to +2. And then, of course, since we have our take profit already set at +4, because it's a 1 to 4 risk to reward on the trades, we'll exit at +4. Okay. Now, these are the only times you exit your trade. That's it. Now, again, the only caveat to that is if it's a Friday afternoon and it's after 2 p.m. Eastern time and you don't want to hold your trades over the weekend. I should have probably put that in here. I will probably add that too here as number 11. Okay, now that I'm doing this, I'm kind of thinking about that. So that probably should be in the trade management plan, but I'll have to think about how I want to do it. Okay, that would be the only time that you would exit other than those 8 points there. Now, the other thing is if you do get a trade alert in the opposite direction, and that has to be a trade alert that meets all 6 conditions, right? So you get a trade idea, you look at it, all 6 conditions are met. You were in a long position in AUD USD. All of a sudden now you get a trade idea that is confirmed to go short. Well, at that point, you want to exit the trade no matter where you're at. Okay. Or you would exit the trade if you get a scorecard candle on the Sniper Pro scanner going in the opposite direction. Doesn't need to be any other further confirmation there. If you get that scorecard candle, you'll probably want to exit the trade. Okay. So this is the trade management rules here. Okay. And these two, 9 and 10, I really haven't had a chance to test out thoroughly. Okay. But that's just kind of my gut feeling that if you get an alert in the opposite direction, you should probably exit the trade. And if you get a scorecard candle on the scanner, you should go in the opposite way. You should probably exit the trade, right? Again, it's just a gut right now. I haven't really tested those out too much. That's why I actually have them in bold here because I see they still need further testing. But right now, they're part of the trade management plan. So let's go over to the charts and let's just show you what this looks like here. By the way, here, you're going to notice that when you look at these trades, you see very few losing trades. Now, this right here, you can see right away, hey, Bill, that's a losing trade there, right? And you are correct, that would be a losing trade. But the problem is that this wasn't actually a trade because all six conditions weren't met. Number three, the volatility band condition was not met on this trade. I just marked it up to see what would happen. Okay, so this really was not a valid trade. So I'm just going to get rid of that. Okay, so let's look at some of these examples here. And I wanted to make this video today because I do have quite a few examples. Okay, this is AUDCAD. So here's a trade right here. Here's our ATH alert. Price crossed above the 55 EMA. The other four conditions were met in Sniper Pro. And then here's what you have. So this obviously is the end where we enter the trade, and then this is the stop loss. Okay. Now these may not have been trades. I may not have taken all these trades. So, the actual entry point would change based on the spread if you got in the trade, right? If you actually took it. But if I didn't actually take it, then you'll see that my entry point is kind of right at the close of that signal candle. This is +1, this is +2, and right here, this was +3, which is the highest it went. But you can see here, once it's up +1, we would then reduce that stop loss in half. So essentially, if you're looking at this and you're saying, oh, our risk is 15 pips, we're just going to go into our broker account and we're going to reduce that risk to basically 7.5 pips, right? Right about to there. And so this way, if price does come back down to break even, we won't get stopped out yet. It has to come all the way down here to basically minus 1/2%, right? So that would cause us, once it's up by +1, to reduce our risk in half, okay? Then once it's up by +1.5, which is about halfway here, between 1 and 2, obviously, that's where we'd move our stop loss to break even, okay? So I'm going to explain a little bit more on this one, but then you can see we go past the +2, so our stop loss gets moved to +1. Then once we get to the +3 here, our stop loss gets moved to +2, and that's where we would get out of this trade at a +2 before price just rolls over. Okay, you're going to see this, and it's just fabulous how it works. Okay, here's another one. Here's our entry, +1, +2, +3, +4 is up here. Again, once we're up +1, we reduce our risk in half, right? If we're risking 17.5 pips, we make this about, 8 pips or 8.5 pips, whatever. Doesn't come anywhere close to there. Then once we're up that 1.5, which is halfway between here, right? Then that's where we move our stop loss to break even. We don't want to move it to break even at +1 because you'll see a couple times in these examples where price comes down. So now it's up +2, here it's up +3, and we move our stop loss to +2, and that's where we get taken out. So in this trade here, we would get taken out at a +2. And then unfortunately, price does move up and goes all the way to our take profit at +4. Okay. So it looks like, oh, Bill, we just lost 2% money on that trade. Yeah, you did. You did. But over time, over 100 trades, over 200 trades, over 300 trades, following this trade management rule, in my opinion, is going to make you come out ahead. Because there's going to be times where if you don't lock in this +2 at +3 here, price is going to come all the way down and you're going to end up getting stopped out at either a +1 or a break even. Okay. So over the long haul, this trade management strategy is going to work out for you. Trust me. Here we have another one over here, a couple of them. You could see here, +1, right? We reduce our stop loss in half, right? Basically, we just kind of move our stop loss to right here. We reduce it in half, right? We go into our broker. If our risk is 20 pips, we reduce it to 10 pips, right? Okay. Now, once we're up that 1.5%, we move our stop loss to break even. Okay. So if we were risking 10 pips, now we're risking 0 pips. But actually, my broker Trade Locker has a button for break even, and it factors in the spread, which is very cool. So you just click one button in Trade Locker on your trades that are open, and you can move that stop loss to break even. And that will factor in the spread. So you don't actually lose any money, because normally when you set a stop loss to break even, because of the spread, sometimes you actually lose a little bit. Okay, so there you are. You get to a +2 and you move your stop loss to +1. And then it looks like right here you get taken out of the trade just barely. Okay, but that's okay, because look, you get another signal now to get back in. Now, depending on where you set your stop loss here, you know, or where you actually got into this trade, if it was a real trade based and you have the spread calculated in there, right? You may not have gotten taken out. But in this example, it looks like you would have gotten taken out of +1, but then you get right back in the trade, right? Get right back in the trade. Here's your +1 here, your +2 here, right? These ones are kind of overlapping. Let me just get rid of that one. Here's your, let me get rid of this one here too. Here's your +1, right? Reduce your risk in half, +1.5, move the break even, doesn't get hit, right? +2, you move it to +1 and you get taken out right here, right? So you did get an extra 1% there. This may have been another entry right here. No, it wouldn't have been. Okay. But you can see though that this trade does go on to be actually a +4, and actually goes all the way to a +5 and beyond here. But because of our trade management rules, we would have gotten taken out with a +1. Okay. But we would have gotten a +1 on this one and a +1 on this one. So that's a +2 when you add them up. And again, over time, using these trade management rules are going to be better than not. Okay, here's another one here, right? Here's our +1, our +2, our +3, and you can see that this goes all the way to a +4, which is our initial target, right? So we're up +1, we reduce our risk in half, doesn't get hit. Now notice here, if we would have moved our stop loss to break even at +1, then that would have got hit right there. And we would have been out of this trade at break even. Okay, I see that happen time and time again. That's why I wait for that +1.5 to go to break even. Once we're at +2, we move it to +1. Once we're at +3, we move it to +2, doesn't get hit, and we get out at +4 on this trade. So this trade would go to completely to a +4, which is our goal. That's our initial goal, right? Right here it says go for initial 1 to 4 risk to reward on all trades. So that one actually gets there, right? Let's look at a couple more that we have here. This one, there's a couple here back a little bit further, right? This one here, here's our +1, +2, +3, and this actually goes all the way to a +4 as well, right? Price comes down, we're up 1, we reduce our risk in half, we're up 2, we move it to +1. Now, we don't know what this candle here did in real time. Okay, it could have moved down and then moved all the way back up, and we could have gotten stopped out at a +1. We don't know because we're looking at it after the fact. Okay, that could have been a news candle. It could have moved down, moved back up, moved back down, moved back up. You know how that goes. But if it was just a normal impulse candle and it just kind of slowly moved down, then you would still be in the trade. You would move your stop loss to +1. You get to +3, you're going to move it to +2. But you can see here, then you go all the way to +4 before it pulls back. And then look what happens after it pulls back, guys, all the way up to where if you would just try to hold these trades, you would lose money. You would lose some of your profit. Here's another one here, a +1, a +2, a +3. Okay, it looks like it does get to a +3. And so let's see, +1, move it to break even. No, I'm sorry, move it to reduce your risk by half, right? A +1. Okay. Now you can see here that this is not quite 1.5 here. You don't get the 1.5 until over here. Okay. So right here, this is just up +1. We reduce our risk in half, right? From 45 pips to about 22.5, whatever. Doesn't get hit. Then once we get to a +1.5 here, then we move it to break even and it doesn't get hit, as you see here. Once you're up 2, we then move it to +1. Once you're up +3, we move it to +2, and that's where we get out right here. Now again here, we have some indicator trade alerts going off here, or indicator, but we don't have the price crossing the 55 to the downside on that candle. And then, of course, we would need all other four conditions on the scanner to tell us to get out of that trade, right? Because that's what we're saying right here. Exit trade if you get an alert in the opposite direction, okay? Not just a trade idea alert, but all 6 conditions are met, right? All 6 conditions are met. So I should probably change this to a trade idea in the opposite direction, not actually an alert, because that can confuse some people because they can think, oh, hey, we got this ATH RSI crossover indicator alert here, so we should exit the trade. No, you need all 6 conditions to exist to exit the trade. Okay, here's another one, NZD Chef. This one here, right here, of course, +1, we reduce our risk in half. +1.5, we move to break even. It gets to a +2, so we move it to +1, and that's where we would get out. And then look, after that, price goes up, would almost stop you out if you just stayed in the trade, right? But then eventually it does move back down, okay? USD CAD here. We have a couple here as well. Actually, we have like 3 on here to show you. Okay, so here's +1, +2, +3, +4, right? We get to +1, we reduce our risk in half, right? So we're going to move our stop loss to about this area right here, right? We get to that +1.5 level, then we move it to break even. Doesn't get hit. +2, we move to +1, doesn't get hit. +3, we move to +2, doesn't get hit, right? These wicks don't come up and hit it. Anyway, it doesn't matter because after we go through +3, we get all the way to +4, and we would be taken out of the trade with a 4% gain. Okay, so here's another one. I think that's the third one in the example that goes all the way to a 1 to 4 risk to reward, guys. Now, I'm not supposed to explain the money to you. I'm not really allowed to do that for compliance issues, but you can do the math on that. If you're risking 1% to get a 4% gain, what does that mean to you? What does that mean? You can do the math. Here's another one. 1%, 2%, 3%, 4%, goes all the way to 4%, two in a row on UCAD, right? We're up 1%, we reduce our risk in half. We're up that 1.5, break even. We're up 2, we move it to 1. We're up 3, we move it to 2. No problem, we get all the way to +4. Oh, what happens? We're out of the trade. Oh, we get back in again right here. Okay, this one doesn't go quite as far. We get +1, +2. So we're up +1. We move that to, we reduce our risk by half. Notice how this comes down. If we move our stop loss to break even at +1, here's another example where we're just out at break even and we don't make any money. That's about what? The third or fourth example. That's why we just reduce it in half and we wait till we get to this 1.5 point here before we move it to break even. That's very important. Very important. Once we're up 2, we move it to +1 and we don't get to +3. So we're out at +1 here. Okay. And then the last one here is USD CHF. We have this one here, which unless we close this trade because it's a Friday, if that's in your trade plan, then you would have to close this trade at some point after 2 p.m. Eastern time or 3 p.m. Eastern time. And if you do that, you would close in profit. So that should probably be on the scanner here on the trade management rules here. So I'm going to trade this to, this is going to change to exit trade if you get a trade idea alert in the opposite direction, right? And also you would exit trade on Fridays at 3 p.m. Eastern time or whatever time we decide to put on it. Anyway, on this trade here, you could see you're up 1% here. If you move your stop loss to break even, you get out at break even, right? And you don't make any money. But if you wait till when you're up 1.5 and then you move it to break even, you would still be in this trade. Or if you exit because it was Friday afternoon and that's in your trading plan, then you would be out in profit and you would wait to take a trade next week. So that's what it looks like, guys. These are the rules, the trade management rules here, and I'm going to have to make a couple small minor adjustments to this where this should say exit trade if you get a trade idea in the opposite direction. Because remember, actually it's not even a trade idea because a trade idea is just the alert coming out. So I'll have to decide how to word that. But what I make sure you understand is that you would only exit the trade if you get a full confirmed trade idea going in the opposite direction, right? So you get that ATH, it crosses on the other side of the 55, and then all other 4 conditions on the Sniper Pro scanner are met, okay? But it's not just an alert. And then, of course, number 11 here should be to exit all trades at 3 p.m. or 4 p.m. Eastern time on Friday afternoon, right? Because we would not want to hold these trades over the weekend. So that's it, guys. Hey, again, if you have any questions, this strategy, like I said in my videos yesterday, you don't even see any losing trades there. And that was all the trades. I didn't leave any out that lost. That was just all of them. I mean, with these 6 conditions here, these 6 conditions keep you out of the trades that lose. And they get you in the ones that are worth you getting into. And then when you use these trade management rules, you can see that probably half of those trades I just showed you there today went all the way to 1 to 4. That's amazing, guys. My point is you need to try this out for yourself. You're not going to listen to me. You're not going to take my word for it, even though I'm showing you it, right? I'm showing you the proof here. But you're not going to take my word as to did I leave out a bunch of losing trades, right? It would have changed your results. That's why you need to try this out for yourself. And that's why it's so important that you just scroll down here. You watch Brandon Voigt Brandon Boyd's overview video on GFood. You get a lot more than just this Sniper Pro strategy, guys. This is really our community strategy. And actually, our community does it on the 1 minute time frame. So if you're more of a scalper, you may like doing their version of it. This is my version on the 15. Okay. I don't like the 1 or the 5, but a lot of people do, and a lot of people make a lot of money scalping on it. Now, you're going to want to click this link here, sign up as a customer. Get started. Okay. They offer a 7-day money back guarantee. So what that means is you can try this out all next week. You can sign up Sunday night, Monday morning. You can try this strategy out for yourself on demo, obviously, or just marking up the charts without even going to your demo account. And you can see for yourself if this strategy is good or not. If you think I'm lying to you, then after your 5 days of testing it out, you just contact the company, ask for a refund. They'll give you your money back, no questions asked, as long as you're within that 7-day window. If not, you stay a customer with GFood, you're going to love this strategy. You know, get with me. I'll tell you about a little bonus I'm going to give you after you make your next payment. Not on this payment here, but after you make your next payment, right? You're actually your first monthly payment, right? This is your initial payment here. I have a special bonus for you, so make sure you ask me about that either before you get started or after you get started. Doesn't matter. Okay, guys, have a great day.